0.5% of our global exports. Thus, we will continue to engage the US with a view to conclude a deal that advances the interests of both countries. South Africa seeks to conclude deals that promote value addition and industrialization, rather than extractive relations that deprive the country of the ability to beneficiate our mineral wealth by mimicking extractive colonial-era trade relations. South Africa's minimal 0.25% share of total US imports makes the 30% tariffs on our country are inscrutable, especially when these same tariffs have been applied indiscriminately to all US trading partners globally. Moreover, South Africa poses no trade threats to the US economy nor its national security. The calculation of US-South Africa trade deficit ignores the substantial US trade surplus in services, as well as the complementary nature of the bilateral trade and investment relations between the two countries. South African exports do not compete with US producers and do not pose a threat to US industry. On the contrary, in the US markets not replace domestic products. South Africa isn't just a trading partner. We are a major investor in the US, with our companies sustaining American jobs. Similarly, over 600 US companies in South Africa contribute to our industrial growth and create employment. Our goal is to preserve and grow this mutual beneficial relationship. Impact of the tariffs. The uncertainty of the new tariffs is already incorporated into economic projections. For example, various economists estimated that it may shave off 0.2% of South Africa's economic growth. The reduction in growth from the 30% tariffs depends on a number of factors, including our ability to find alternative markets. It should be noted, however, that 85% of South Africa's exports remain exempted from the tariffs. All applicable exemptions published in the previous US executive order are said to remain in force, and these exemptions covers products such as copper, pharmaceuticals, semiconductors, lumber articles, certain critical minerals, stainless steel scrap, and energy products. Importantly, due to South Africa not enjoying a counter-exemption for Section 232 duties on steel and aluminium, South African companies have already adjusted to the Section 232 duties since 2018.